to our next story today. Prime Minister Narendra Modi has attacked the previous Congress-led UPA government, blaming it for the bad loan crisis in state-run banks. He said bad loans problem is a liability handed over by economists in the UPA regime.
Indicting the previous government for the NPA crisis, Prime Minister Narendra Modi, while addressing FICCI's 90th annual general meeting, recently termed the surge in non-performing assets in the banking system as the biggest scam of the UPA government, even bigger than the Commonwealth and 2G scams. The Prime Minister also questioned the silence and inaction of institutions, including FICCI. He said that the government is working to protect the interests of the account holders, but rumours are being spread about the Financial Resolution and Deposit Insurance Bill. Despite the government and RBI announcing measures to address the NPA issue, banks have also seen them rise.
कुछ बड़े-बड़े उद्योगपतियों को लाखों करोड़ों के लोन दिए गए, बैंकों पर दबाव डाल करके पैसा दिलवाया गया। ये आजकल नॉन परफॉर्मिंग एसेट्स एनपीए का जो हल्ला मच रहा है, वो पहले की सरकार में बैठे अर्थशास्त्रियों की इस सरकार को दी गई सबसे बड़ी लायबिलिटी है। पहले की सरकार में बैठे लोग जानते थे, बैंक भी जानते थे, उद्योग जगत भी जानता था, बाजार से जुड़ी संस्थाएं भी जानती थी कि कुछ न कुछ गलत हो रहा है। ये यूपीए सरकार का सबसे बड़ा घोटाला था। कॉमनवेल्थ, 2G, कोयला, इन सभी से कहीं जड़ा बड़ा घोटाला ये बैंक के कारोबार से जुड़ा हुआ था।
While the gross NPA of state-owned banks stood at rupees 1,76,000 crores in June 2013, it rose to rupees 8,29,338 crores by June 2017, a rise of 371%. A similar trend was seen in private sector banks too, as the gross non-performing assets of private banks soared to rupees 1,481 crores at the end of September this year, against rupees 22,020 crores in September 2013, witnessing a rise of 356%. The jump in the NPA ratio in the last 2 years can be attributed to a combination of the recognition norms being pursued by banks after the RBI highlighted the same in late 2015 asset quality review initiated by then RBI Governor Raghuram Rajan, as well as to inadequate progress in the health of the companies. The banks were supposed to clean up their balance sheets by March this year. So what more to expect beyond timelines and deadlines? Will the government further bring out stringent rules and regulations to tackle the NPA burden?
Right, so what more to expect beyond timelines and deadlines? Who should really be blamed for the present crisis? The government has announced over 2.11 lakh crore capital infusion for the NPA-hit public sector banks over a period of 2 years. Public sector banks command a lion's share of the loans and deposits in the Indian banking system. The move could actually provide respite to a sector whose total gross NPAs in March 2017 were equivalent to 5% of the country's GDP. Non-performing assets of banks have increased from rupees 2.75 lakh crore in March 2015 to almost around over rupees 7 lakh crore in June this year. So what kind of relief will it give to the banks handling the burden of stressed loans? How can bad loans problem really be solved? And what are the other steps needed? Joining us on the program today, a very esteemed panel, Sanjeev Gupta, PhD from the Managing Committee of PhD Chambers of Commerce and also the Managing Director, NextGen. Thanks very much, Mr. Gupta, for joining us on this program. Also with us is the former MD of Deutsche Bank and National Spokesperson, BJP, Syed Zafar Islam. Thanks very much, Mr. Zafar, for joining us here. And Professor Aman Agrawal, Director, Professor, Indian Institute of Finance. Thanks very much, Professor, for joining us on this program. So coming straight to you, Mr. Gupta, on this, the Prime Minister in the annual general meeting of the FICCI categorically stated and said that this particular liability is handed down by the economists sitting in the previous government. It is a failure of institutions, categorically also stating that FICCI should be held responsible and many other such institutions. How you, in your capacity as associated with the PhD Chambers of Commerce, will comment on this sort of a remark?
The remark is largely in the context that, the NPAs on 31st March 2017, if we see, is a figure of around 6.5 lakh crores, as you rightly said. By June they had increased to 7 lakh crores, 7 trillion rupees. And if you see the entire stressed asset, that is not only just non-performing assets, the entire stressed causing assets for the banking system is in excess of 10 lakh crores. It may be very pertinent for us to realize that this is 2 times the GDP of Sri Lanka.
True.
So I think what we are talking is a very huge figure, which does not look, amidst all these large numbers, it looks a very small figure. So his concern is very right. And, and he comes from a perspective where non-performing assets have not been witnessed in that state. I have had the benefit of working with Gujarat state for more than 15 years now. And we do not know what NPA is. Out of all the loans that Gujarat state companies have ever raised, there has been no NPA.
So why the pileup happened in the first place?
This is, I think, the key issue is to first understand what is an NPA.
Right.
Let me very briefly define NPA. There are 3 words there: non, performing, and asset. Let's start with what is an asset here. Is it a project itself, or is it actually the loan which the bank has given, against which it is wanting the recovery of its principal as also the interest thereon? This is what is an asset to a bank. And this, till the time it is performing is defined typically that it is repaying on time the principal as also the interest thereon. Till the time that is happening, it is performing. If it is not happening, which is bank's legitimate claim, then it becomes non-performing. And furthermore, to become a non-performing, there is a timeline devised even for that, that you could, you could not pay, let's say, for 1 quarter, say the first month, the second month, and 90 days, the third month. Then it starts to become NPA. So I mean, there is an ample time that the bankers have been providing. Why is it at the center stage today and never before? It is at the center stage today because it has crippled the economy today. Once recognized as an NPA, that particular, I would say, try and understand it this way, that the entire money system gets choked. You are no longer getting your principal back. You are not earning any interest on it.
So that primarily is how NPAs are impacting the economy and the overall economic growth. But if one has to really understand in layman's term, why NPAs happen in the first place, whose fault it is? Because, as someone, who's sitting on the other side, would want to know that whose fault is it? Is it the banks which are responsible? The banks did not exercise due diligence, sincerity in knowing very well who they were actually lending? Or is it the institutions or the economists or FICCI or CII? Who's actually responsible for this?
Fantastic. I think that's a very nice question, because there are largely 4 stakeholders, I would say, in the NPA, if you ask me. The banks are at the center stage because they are the ones who have lent the money. The borrower, which is who has taken the money. And there is a complete role for the government itself, which is actually encompassed both the banks and the borrower in terms of policy and its consistency and its application thereon, and helping the growth itself. And the 4th, which is not as clearly seen, is a very important factor, which is the global and the national economy in that sense. Or I would call it the external factors, which is not in the control of any 3 of them. So let's start first of all with the borrower. Why has the borrower failed to repay? No borrower actually puts up a project to actually not repay. The core of any project is to make money. Till the time it is making money, both the banks as well as the borrower will make sure that it repays, because they have to take more money. And I'm excluding out of this the people who are willful defaulters, who have actually taken out the money from the project. They are not what we can discuss. So I mean, that's not something what is the agenda. So why has this happened? Clearly, the policies or the economies have slowed down compared to what they had envisaged at the project time. And this is what I bring the external factors into the play. They are not getting enough cash flows to repay back the interest and the principal payments. The second stakeholder, as you rightly identified, is the bank itself. What have the banks not done proper? They have also not recognized the timing or the future as much, but two things that they missed out on very critically. And you know, if you analyze the NPAs in a greater detail, one realizes that it is 11.2% of NPA level of all the loans given by the public sector banks, which is what is at the center stage, versus around 7% of the private sector banks, which is actually causing this 9% NPA level that we are talking about in the country. Now, the banks have failed in the critical level of due diligence, one. Even if they succeeded that, the second point we are noticing that they have failed upon is a constant monitoring, which should have allowed them to understand that, you know, there is a mismatch.
So you actually referred to several stakeholders, and there are many. So let's not pinpoint only one institution or only a lobby of people who are actually primarily responsible for the rising NPAs. Zafar Islam, in your capacity as a former banker, what really surprises you the most about the NPA problem? Because when I look at the figures, what surprises me the most is, of course, the fourth time since the mid-80s that public sector banks are being infused with substantial capital due to high NPA. So one thing is very clear, that NPAs will continue. The government will keep giving them the money, but there will not really be any substantial change in the overall environment. Are we not treating the core issue? Are we just treating the symptoms of the problem rather than actually a very temporary approach towards a bigger problem?
You're right, but since the time our government is in place, we have addressed the root cause of this problem. And what was the problem partly has been addressed by my colleague. But what is more important for us, all of us to realize, the debt from public sector bank was very easily available. The due diligence, what was expected for them, it should have been done by them, have not been done by them in terms of credit evaluation process. The way they followed the credit evaluation process, something that was can be questioned very easily. Third thing which is very important, that the assets which was available for securing your loan, the valuation of those assets is again questionable, because they did the valuation and they assumed escalated valuation, or something which is actually has put their exposure in today's situation what they are in. Third thing which is very important, that as you see the symptom that the company is not performing, or the project is not taking off, or the management is not paying attention to their project, then the bank should have done some due diligence, and that they should have paid attention. Let me give you an example. Earlier, if you have non-performing asset, you will go to court, then substantial time you have to spend court and then take approval from the court. Once you have a go ahead from the court, then you will take other recourse available to take care of the assets, or the projects. But subsequently, the debt CDR and debt tribunal was formed. But those were actually means to address the concern of the problem, but actually the bank didn't do that. What they did, which actually, and with the help of the government at that point, at the government of that time, was that the CDR mechanism, which was introduced by RBI, was misused substantially by banks with the support of the UPA government. How? I'll tell you that if you have a problem, the problem is identified that the company is not performing, then instead of taking a concrete action to ensure that the money gets recovered and of whatever needs to be taken, the action to be taken, that should be taken. But instead of taking those difficult action decision, what they did, they actually restructured every loan.
There was corporate debt restructuring.
The CDR mechanism was misused. Every single project, every single client, they were put under CDR scheme. And that was the biggest problem and the biggest mistake the banking sector has done, and with the support of the UPA government. Because this was done at the behest of the UPA government, and every single borrowers were put under CDR, and they didn't recognize whether the promoters are actually willful defaulters, or the business itself is going through a tough phase because of economy slowing down, or the cash flow whatever they had projected somehow the business is not generating that much
Okay,
cash
so
flow.
there was
Service
as such no distinguishing factor.
So they have not distinguished at that time, and what they did, they restructured every single loan, and what they did, they gave 3 years time and moratorium for both interest as well as the principal payment, so that 3 years there will be no pressure for the incumbent management at that time. And that has created problem from 2.75 lakh crore to 8 lakh crore what we have today. But what we did since the time we have formed the government, that we introduced this bankruptcy code and NCLT, and that a lot of these assets have been transferred. The case has been transferred to NCLT, where the NCLT within 180 days will come back whether this asset can be. Even the SURFACE Act, the SURFACE Act was not effective, because by the time you get the approval or transfer the asset into SURFACE, the valuation of those assets, because anyway it was higher valuation, so bank was not able to recover.
So you're saying that your government has taken several legislative
measures. So we took very important decision first. Interference from the government to the bank. Absolutely, there is zero interference. The government does not interfere in the operation of the banks. Secondly, no request from the government to the bank management to approve a loan or disapprove a loan. It is only on the basis of merit. Third, we have also ensured that the bank put a very strong credit evaluation process, so that the loan is disbursed on the basis of merit, approved on the basis of merit, and the asset. Even many cases you will see that the guarantee have been, personal guarantee have been taken, but the personal guarantee have not been collateralized with any asset. We have ensured that those due diligence must be done, and it is being done today. But the most important issue is that recognition of this non-performing asset, take appropriate action and ensure that the recovery mechanism put in place, and that is what the government is doing.
Okay, and most importantly, not living in a state of denial and acknowledging NPAs as a problem and the way NPAs is actually hampering the growth of the economy. Piyush Goyal gave some figures, and he said categorically that in March 2014, 36% of stressed assets were identified as NPAs. In June 2017, this jumped to 82%. You just heard Zafar Islam in his capacity as a national spokesperson, BJP, and also as a former banker. He has said that how, we have seen several cases of behest lending. Just on a phone call, loans were given and there was no accountability. And this whole procedure of evergreening, corporate debt structure, restructuring, and different mechanisms, in terms of really soothing the willful defaulter or someone who's actually defaulted because of several other reasons, be it the market issues or several other challenges. What's your assessment at this stage? Do you think that the government looks very serious in terms of tackling the NPA crisis? Where are we really headed?
I'm happy you raised this issue, and you actually come out with the main point. The issue is about accountability, and it is not only this government but otherwise also. The issue when it went up to 2.75 lakh crores, if you really look at the previous decade from there on, almost about 12 lakh crore worth of assets had been written off by the RBI for banks on a year-to-year basis. So it's not something which is just coming up afresh. It has been there in the past. Also, the fact that it has risen to about 7.33 lakh crore today is a major concern, given the fact that large amount of deposits and large amount of money after demonetization has now moved to the banks and is no longer with the people of this country, and they are the real custodians. So if they are going to do some kind of management or mismanagement of these funds to write off these assets and clear up their balance sheets, would be a big havoc for this country. I think there is an attempt to try and rectify this problem, but there is still not a serious enough effort. I think the Prime Minister has made it very clear and categorical, but I think the regulators are not following the tune, not only in banking but in other streams as well, what the Prime Minister wants for this country in terms of making it go forward. What is most important is, it has been known that there will fall defaulters. It has been known that bank loans have happened. Why have these chairmen, even in the United States, the Congress had called upon chairmen of banks to come up and make a representation. For last 10-15 years, when these NPAs have got risen, why have those chairmen not been pulled upon and accountability been asked to them? When a private company chairman can be put behind bar and can be made responsible for any NPA which the company creates for any reason, why can't a bank of a chairman be actually accountable, or the top management of that bank be responsible? Important component is, yes, different measures are taken by different governments, and at times chairmen have to act upon it because they are political appointees as well. So to think that they will not act in the interest of the political power in power at that stage would be wrong. But the important thing here is, if there is no accountability, there is no threat. You see, even in the Hindu religion, we say the fear of God, and not only Hindu, most religions, they talk about the fear of God. You have to be, you will be punished if you don't. I think that fear in the banking industry is not there even today. Until that time, if it is not taken care of. I like to also point out the fact that I have raised at Lok Sabha television many times, that there was a book brought out by the Bankers Employees Association way back in 97, 98, a huge book which actually brought out large number of defaulters at that time. They brought it from the point of view of bringing out that their efficiency in banks is not because of their inefficiency, but because of NPAs which are being created by large number of firms. That book has been in public domain with large number of leaders, by bureaucrats, with bankers. No action been taken in 20 years. What are you trying to tell to the market and the bank and the community, even the corporate world or the industry? You welcome to default, because there will be no accountability and you can have a comfortable life going forward.
Okay, if one has to draw a parallel with Indian public sector banks vis-a-vis international banks, what is really what shocks you the most about the Indian public sector banks?
You see, first of all, Indian public sector banks in a very good conditions as of today in terms of liquidity. Yes, recapitalization, which we'll talk a little later, but not so much in recapitalization, but in terms of liquidity, they're fairly comfortable. Being conservative also helped them during the 2007 crisis worldwide not to actually clamp down. Private sector or public sector, most banks around the world have been actually avoiding this issue of NPAs on one pretext or the other. Both of them are in the same ball game, whether it is private sector or public sector. I would not like to name the names of, I think last 10 years is very evident how private sector banks have actually played on the level playing field worldwide, and the kind of NPAs have been generated, and in terms of toxic assets which are actually created. It is not a public or private sector debate. The question is, are they accountable? Now they are being called for. And if they are going to be called for, the accountability will automatically. When I know that I can be called for the loans which I have sanctioned, I will be more careful and more diligent. The other thing is, the academics has brought out an issue of about stress testing, which the Fed has been doing, and even the RBI, when Raghuram Rajan was here, tried to push it to the banks. None of the banks, whether private banks or public banks, are doing stress testing within the firms or making it public as well.
So several important points have been raised. Most important, of course, is that how do you instill fear in the system? How do you make the bankers accountable, bring in the sort of regulatory mechanism which is required? What sort of legal processes are we really talking about? The government has mooted a big bank recapitalization plan. The bankers are happy, but how will this really help the whole issue of NPAs? On the other side, when we come back, let's try and understand the larger bank recapitalization plan, and via the special recapitalization bonds which have been introduced, how will this help on the other side? Stay tuned. Welcome back. You're watching Inside. The past couple of days have brought cheer to public sector banks. The promised recapitalization of 2.1 trillion rupees takes care of not only the provisioning requirements of public sector banks, but also provides them with growth capital. All requirements of public sector banks have been addressed at one stroke. Bank recapitalization via special recapitalization bonds is an approach the government used in the 1980s, 90s. Our focus now, if the benefits of recapitalizing banks are greater than the cost of broad disruption in the real economy. Coming back to you, Mr. Gupta, on this, how do Indian banks really compare with their global counterparts? One has to understand how bad we are performing in our non-performing assets if one has to compare this with the global counterparts.
So, besides the fact that we should compare them with the global banks, let us just take data which belongs to this country itself first, and see if we were to see the top 20 non-performing assets generating banks, one would realize that 18 of them are public sector banks. And only 2 figure in that list of 20 largest gross NPA banks. Only 2 private sector banks. And These banks, incidentally, two of them are the ICICI and the Axis Bank.
Okay.
Now, 18 public sector banks versus 2 is not only one figure, but let me just say the gross NPA levels. This entire chart is led by the IDBI Bank with a gross NPA level of around 24% plus. Next to that is the Indian Overseas Bank with around 23.6% of gross NPA level. SBI, which is the largest NPA holder, but still the percentage is around 10%. And if you were to see the private sector banks, which are the two bottommost listings there, they are at a level of around 1.5 or 2%.
Right.
So, you know, somebody would say that, you know, comparing Indian circumstances with another country, because the two are very different. The infrastructure level, the consistency of policies, the fact that, you know, they get a streamlined kind of a environment to operate in, and producing results thereafter on a project are just a matter of, you know, doing your project well and then producing the cash flows itself.
Right.
So these, let's see within the country first. And I think a very important thing that has changed, as Zafarji was saying, between what was the regime earlier and now, is to be realized very clearly. I think, see, whenever a loan is given, there are three important aspects to it. One is you have to recover the loan.
Right.
Second is, if the environment is not good, then you have to do something about it. What do? You restructure or you resolve. That is one of the options. If the company itself is doing very well, they will seek what is known as repricing.
Right.
Which is what I was referring to when I was talking about the Gujarat
Okay.
companies. You know, they've really repriced their loans. They've sought repricing repeatedly. And many of the bankers who are hearing me, they would recall that we've taken the best of the rates. The third most important thing thereafter is that if after doing all this, you still have to maintain a cash flow in the system, because unless the machinery, the vehicle is well oiled, you can't go forward.
Right.
So that is what is recapitalization all about, which is what you're rightly referring to. This recapitalization should make the banks adequately, not only the provisioning part. See, the provisioning is what they cannot lend any longer. They keep it as a provision, as a cushion, because the loans have gone doubtful or bad. There are three NPA categories, incidentally. The special mention category, then comes the doubtful, and then becomes the loss. So the provisioning levels become more and more steep as you go on and come to a loss level.
Okay.
At loss level, it is around 40%. So if we say that typically this is around 7.5 lakh crores or 7 trillion rupees, then you need at least 3 trillion rupees of provisioning itself.
Okay.
What we are talking about is just the first step of the government to try and resolve this, because they understand that the growth is very important. The government is focused on trying to create growth, and for that, this is just, I would say, the first step in that direction. It will not be adequate enough.
Okay.
So 2.1 is almost, in my opinion, almost the 50%. But this has to be infused right now.
Okay.
And that is what is the plan.
Now, the basic economic Keynesian principle of infusing money, stimulus which is required. So you first give money and then you expect that there will be growth in the economy. But there are many who also call it a major disruption. You know, how far can I really cushion the government, and how far can I continue cushioning the government by providing this the sort of major capital infusion which is happening from the government side? Yes.
Well, Natasha, it's a taxpayers' money, and we cannot keep on recapitalizing bank. And the government is extremely sensitive about it, because it's, at the end of the day, it's taxpayers' money, and it needs to be spent judiciously. So those recognition in this government is there, which unfortunately was missing in the past. So how it can be addressed? See, bank was in such a state, and it's not because of our fault. It was something which has been given to us by the previous government. It needed to be addressed, and so the government has taken a call that the capital adequacy ratio of many of the banks had come off significantly. So they needed to be capitalized so that at least they can maintain the capital adequacy ratio. And then, of course, they need some amount of money for the growth capital as well, because if you see, the credit offtake has come off significantly from what we used to see, 22% or 23% to currently 5-6%.
Right.
Purely because that time that was not the right parameter, 22%, 23% what we have seen, because it was like easy money available for any promoters who have understanding with the bank management and the government of the day, and that easy money can be arranged. And we have seen enough instances where the government interference were there, and that's why money was made available to promoters without distinguishing whether it's the track record of the promoter, whether he has a ability to pay or put up a project, or is just a willful defaulter who will siphon the money, and with the support of the government of the day, and which has been done not once, many more times, and that is why we have seen this NPA problem.
Right.
But the government have taken a call that first, if you see that we change the management in the sense that we had also in the large bank, we have agreed for a lateral recruitment, so that MD of private sector, MD has been roped in from market, who had the experience of either running a multinational bank or private sector bank, but have a very good track record and credibility. Those have been hired by many large public sector banks as a managing director and CEO for a day-to-day operation. And to ensure that the credit evaluation process, the robust approach which is needed to approve the credit, those systems should be put in place by those new MD and CEO. And then the chairman was there from the public sector banks. But I think that is paying off, even though there is a slowdown because the credit offtake is not taking place. But at least whatever credit is being given to the borrower is being given based on the
so
merit.
So you're saying greater professionalization.
Yes, professional. Secondly, what I also wanted to highlight that unlike global banks or in other global markets, banks are lending 80%, 75 to 80% to individual borrowers. In India, it is very different system here, where 80 to 85%, if you see the corporate bank exposure is to corporate. That's why there was a report which had come up in 2013 by a multilateral institutions or bank. It's called debt curse. I think it's debt curse. That report suggests that Indian banks, if you just say 10 large clients of private sector banks, actually responsible for what problem we are facing today.
True.
And those 10 corporate had a definitely hand in glove with the government of at that time, UPA government, and their senior leadership. And they were responsible for giving them, pushing them to take loan from banks, even though whether they were convinced, not convinced that they can put up a project, and whether the project will throw up enough cash to justify this kind to debt servicing of the kind of loan they had taken. So I think those things are behind us, because we have put in a system, we have put in professional management, we have put in a proper system and process, we have put in a due diligence process, we have put in check and balances. But the slowdown which we have seen purely because of the global reason, now it has started taking off. And if you see the moving average number of IIP of the September quarter is actually showing that the growth momentum has come up.
You've raised several points. You're talking about greater professionalization, more professional directors rather than political appointees or political nominees in the senior management level of many of these banking institutions. Simultaneously, also, as the RBI has also identified in June 2017, 12 of the biggest loan defaulters, and their collective borrowings amount to around 1.75 lakh crore, which is like 1/4 of total NPAs. Prime Minister also talked about indiscriminate corporate lending. Unlike other banks abroad where lending happens in different sectors, real estate sector or to individual borrowers, here it is primarily for corporate lending. How do you really distinguish the two, and the step taken by the government in terms of recapitalization? Will this solve the problem?
I am happy you raised these two issues. Firstly, I would like to clear this myth about recapitalization. The recapitalization, as written in various places, is not for managing NPAs. It is not from the purpose of resetting their balance sheets. The purpose of recapitalization emerged from the prime purpose or after demonetization, when large chunk of depositors' money came into picture. And if we want to confine to Basel III norms, which we are supposed to do by March 2018, we have to have 9% of our capital as the capital base for the bank, plus about 2.5% which Indian government requires. So we are looking at about 11.5% as capital base. Given the demonetization money which has come into the banking system, after some gone back, but largely kept in the bank, our demonetization capital proportion is gone down very small, around 4, 5.5%. Varying from bank to bank. Now, this is where the need for recapitalization has come in, not from the NPA issue. So, to mix these two issues is different. Recapitalization is more like a capital of a company. Similarly, a bank is like a company, and that's where the capitalization requirement. And the need for this 9 and 11.5% is to secure the depositors. So, suppose there's a bank run tomorrow, where are the depositors going to get the money? Certainly, the central bank, and in case of India, even the government of India has vouched on the currency note that they will be bearers. But despite that, the banks have to take their own call. And in that case, they need to take out that money from the recapitalized money, which is the capitalization money which has been kept by the bank. And that is the prime purpose of the. So it should not be mixed with NPAs, first of all. Secondly, I think there are being steps which are being taken both by banks and the government in terms of trying to bring in regulation systems to actually do away with the NPA problem. There are different suggestions coming in from PREM, creating a different body to look at. Japan did that way back in 1990s, and they were successful by clubbing all NPAs and pushing it to one organization where a large number of government officers went and sat and became a resting place for most of them, and a complete failure for Japan. And we have seen 30 years of Japanese sluggish economic growth, which has been their depressing economic growth for the last 30 years. We don't want to land up into that. So there are innovative solutions to resolve this NPA problem. You are very right when it comes to, and my colleague from the Deutsche Bank clearly mentioned about the fact that the distribution of assets has quite different. Please also understand that banking in the United States and large part of Europe allows you to take money for investing in capital markets, which only got allowed in India for only about 15 years back, which was not the case. And even today, it is not that aggressive, which is done. Being conservative in nature, as being an aggressive bank in the United States or Europe, the allocation of resources has been different. Are they immune to it? No. I think the United States has gone through 3 times the NPA problem. In the 80s, they had one. In the 90s, they had one. And in the 2000s, they had another. The same NPA called into toxic assets, called into different assets, called into derivative kind of an asset. They knew the problem was coming, but they did not resolve. So it is that attitude of not resolving a problem. You know, it is like a body. I am not healthy. I am not well. I go to a doctor. I come to know I'm not well. I say, oh, I am looking well. I put a makeup and look myself very well. But the disease is eating away the body.
The adamancy that exists
with
within
large
the
number
system.
of banks and financial systems.
Yes.
The Indian bank, given the kind of asset they have, is a concentrated asset. And so they are exposed to higher credit risk. Compared to they appear in global markets, they are not. They are very diversified risks. Diversity itself reduces the credit risk substantially, which is the biggest concern Indian banks are facing, and that's why it is for us, all of us, as a part of the government, also in bank should focus on retail banking, and that's why the Honorable Prime Minister, even in his speech in FICCI, mentioned indiscriminate corporate lending, because that is something needed to be addressed.
Final word on the program, last 5 minutes. Mr. Gupta, what more needs to be done in terms of fixing the problem? Do you think there is a high level of paranoia that exists in the system now? Even genuine people who want loans, are the banks ready to give them loans if they need it for genuine purposes? You know, infrastructure, we have seen, we're talking about sectors which are hugely impacted because there is no credit available. How do you look at the paranoia that exists in the system at this point of time, and what needs to change to fix the problem?
So let me divide your question into 2 parts. One is, you've rightly identified that there are some sectoral, NPA concentrations which has happened. So let me just give you an update on that, that the 7 sectors that I can recall very clearly, which have impacted this high level of NPAs, include 1, agriculture, construction, 2 infrastructure sector figures there, 1, energy, which is the largest concentration of the NPA of around 4.5 trillion rupees out of the entire 7 trillion. So it is that large. Roads and highways, another one. For that matter, the textile and engineering are the 2 other sectors which have contributed to that. Now, let's also see, as you rightly said, that how do you address this? So is the Insolvency and Bankruptcy Code enough going to be there? In my opinion, no. what you are doing is you have changed the restructuring to resolution.
Okay.
Will resolution completely solve the problem? I mean, imagine for a moment that there are no longer entrepreneurs who are going to be taking risks. This country is not actually talking about that. So what is it that we have to do? We have to understand. So of course, let me add two things here, that the Ministry of Finance under the able leadership of the Honorable Finance Minister is actually talking about two more steps, which we have probably missed out here, which I need to give credit for, is the complete consolidation of the banking system or the banks itself, the public sector banks, which will consolidate them into less number of banks, and that will be a very important move to create global scale banks, which is what he's been talking about. There's no doubt. Second, a very important thing again is somehow to allow this NPA to remain segregated in another part and allow the banking system to go on, which is basically allowing the cash flow and the money system to come back into the system. So very important. But let's understand, so what is it that has caused this problem? Unless we do that, we will not be able to diagnose it. So very clearly, the infrastructure sector is what is the largest infusion that will be required and that is what the government focuses also. And I heard Honorable Finance Minister yesterday also very clearly talking about it. And he's very rightly recognizing it. But what we don't have in this country is a very deep bond market. Because once you've taken a call, you must be able to get out of it. Unless you create that deep bond market, why is the bond market not there? The bond market is not there because the global funds today are very attracted towards India with the kind of management and regime that we have been able to bring in. So what they need is a very important credit enhancement tool to come in. And this together is what will create the magic that we are talking about.
So plethora of measures are required. I'm left with the last 2.5 minutes on the program. A quickly final word from you.
I think since he has already mentioned, I'll just pick one issue which he has raised. Because the government is focused on the recovery mechanism and we have put in place recovery mechanism. Then they also, as we said, that write downs, when you write down, you can always write back once you recovered those money. So it's not that it has turned to be bad asset. But one thing which is India is facing, as I said earlier, that the government banks are exposed to larger credit risk and concentrated credit risk purely because there is absence of bond market. There is a bond market. Bond market is also growing rapidly, but the long-term money is only available in bond market. Because if you see the asset liability in bank, they have a short-term deposit and long-term asset, and that is the biggest problem they face. So they have a problem of ALM, asset liability management, and that's why a bond market, and that is what the very developed, sophisticated bond market is available in other country. The focus of our government, and I have heard many occasions where the finance minister and deputy finance minister have spoken about it, that deep bond market should be developed, and how it can happen when there is a lot of liquidity, not only for AAA rated bond like today we have, but if you have to come down to credit curve, and that should be available even for A rated bank, and that liquidity once you have, then a smaller corporate, a larger corporate, all can have access to bond market.
So deep bond market, long-term capital market, deep bond market is required. Completely out of time. Just last word from you.
Just quick 4 points. Firstly, accountability in the banking system. Secondly, the regulators must toe the tune of jobs and growth, which the Prime Minister has been talking about, and seeing whether it is SEBI or RBI. Thirdly, they must try and induct academicians, gurus of this country to come and start working on these issues instead of only bureaucrats being put in all committees in this country. Fourthly, the post office banking, which I have spoken here many times, and the finance minister introduced in the budget, must be enlarged because post offices reach the nerves of this country all throughout this region. And I think they are one of the most strongest to liquidate and get the money which is held up in large amount of small cities of this country into this financial system for financial inclusion through the Jan Dhan program and other programs which they have launched.
And raise the stakes for everyone, as you rightly pointed out. Involve everybody in terms of carving out an innovative solution to a problem which is as huge as the non-performing assets. Look at the numbers which we have. Thanks very much all of you for joining us on this program, and that's all we have for you in this edition of Insight. Thanks very much for watching.